What's up, everybody? Welcome back to the channel. A lot has been going on. I wanted to take some time to really break down some changes that have been happening over this past week or so, specifically related to regulations. There's been some new IMF documents. So wanted to take some time and really explain that. And of course, there'll be some new videos coming out this week. Keep you guys updated on different utility cryptos and the new financial system. But in this video, there's been, like I said, some new information and new changes coming out. I wanted to take some time to break that down. So it all helps to really understand overall market direction and what's going on macroeconomically, to really pay attention to what regulations are happening and how central bank digital currency is coming along. Because like it or not, CBDCs are coming, and how they are implemented will affect the entire crypto space. So you see here, Russia, they just now are recognizing crypto as a form of currency. Just recently, they had banned it. So it's like, what you do is you see these central banks, you see these agencies, you see these governments, they say one thing and they do the next here. So, they're going to start, you see they've reached an agreement to draft legislation or amend existing laws recognizing crypto as a form of currency. So they're essentially wanting to do that so they can get out of sanctions. The U.S. and they use SWIFT. They use SWIFT as a tool to maintain control over quote-unquote rogue nations, and they cut other nations out of the financial system through means like SWIFT. So of course, countries like Russia, if they see, in China and other countries, they're Iran, any of those countries that the U.S. typically sanctions or has the ability to sanction, they want to get out from under that control. So you're going to see this. The U.S. is going to have to keep up. Now, a New Hampshire governor establishes a new commission to study crypto. This is literally just from yesterday. The governor of New Hampshire has announced a new state commission focused on the study of cryptos. Now, why is this important? All right, well, if you're in the United States, you see that stable coins and discussions around stable coins and how the central banks in particular are going to implement CBDC policies. Now, I have a new document from the IMF I'm going to breeze through here in this video as well, but you see different local in the United States, it's really just kind of a different political environment. I think things will be enacted on a state level potentially, at least directions for what will happen next, because there are definitely a lot of folks that are very nervous. We have Tom Emmer. He is putting legislation forward that would prevent the central bank from even issuing currency directly. So we'll talk about what that means, but I wanted to point out that it definitely is a conversation being had. Now, the inflation rate in the U.S., you see right here, just was released for January yesterday, and it's up 7.5% is the actual inflation rate, up from 7% year over year just from 1 month ago. So, what the overall effect is going to have, what is the overall likelihood of a March rate hike? Since the CPI, you see, are disappointing again. Inflation's continuing to rise. This is according to Blockworks here. Highest inflation year over year increase since 1982. So, we're definitely going to see an effect on the crypto market. U.S. stocks recovered most of the inflation-driven losses as investors anticipate that pricing pressure could be peaking just before the Federal Reserve's March policy meeting. That'll be the meeting we want to see, where they actually implement any kind of change. With the Fed president's already on record against a 50 basis point hike, though, some folks are saying they don't think it's likely. According to Joseph Wang there, you see a former senior trader on the Fed's open markets desk. So you see here last week, he told Blockworks he doesn't expect a rate hike in March, but one later in the year. Regardless of what and how much they hike it by, inflation is still up. So we're going to see assets like crypto, I believe, in the long run, be what saves overall financial space. And again, U.S. lawmaker pushes for state-level regulation on stablecoin at a hearing. So Patrick McHenry implied that U.S. regulation of stablecoins with a single regulator at the federal level would likely fail. They want to give the authority over several governing bodies. He wants there to be more oversight. This was actually a discussion among at least 2 U.S. lawmakers in a hearing on the House Committee on Financial Services. Speaking virtually at a Tuesday hearing, they were going over that. They said basically Patrick McHenry He asked the committee to consider state-level regulatory frameworks in lieu of a comprehensive federal law on stablecoins. So again, that will be now stablecoins versus a direct central bank digital currency. That is the discussion, and it's really comes down to here in the United States, will we have commercial banks issuing stablecoins? Will we have commercial banks issuing their own paper and backing it with the dollar? Will they be holding central bank debt or assets? Who knows really for sure what will happen? I feel like it is definitely going to be a hybrid system. It could be a hybrid system of private commercial banks issuing stablecoins as well as a form of central bank digital currency. But I believe it'll be intermediated. We're just going to have more of these types of discussions. They want to see essentially a less fragmented framework is preferred. So you have a bunch of stuff, though. The problem with state level regulation is it will be more fragmented, and that's kind of the discussion right now is what is the best way to do it. The working group is like, well, we need to have something that's more consistent, more, I guess, at a federal level. So you'll see here, Tether, another article here, Tether is a time bomb, says Congressman Warren Davidson. A lot of folks are really looking into Tether. I know if you're in the crypto space, watching this video, smash the like button if you are really paying attention to the underlying trends here. Tether is a time bomb. We'll see what happens with that. I don't really hold very much Tether, if any. Currently, I think I have maybe 10 or 20 bucks of it just kind of sitting around in a few different wallets. But other stable coins I think are better than Tether. And just with what they're doing, no transparency, no disclosure, it's definitely something I don't really want to stay near. And I know other crypto folks talk about this as well, and it's just not. It's something that definitely is a growing issue to be aware of. Now, as far as institutional adoption and what's coming, let's kind of move into that direction because this is the future. You see here, KPMG Canada adds Bitcoin Ethereum to corporate balance sheet. If you don't know who that is, they're one of the big four here, accounting firms consisting of Deloitte, Ernst & Young, KPMG, and Price Waterhouse Coopers. They're essentially large corporate firms that you see here offer audit, assurance, taxation, management consulting, actuarial, corporate finance, and legal services. So you have them joining, getting crypto, and what that means is once these massive companies get in on something, everybody else has, they pull the rest of the market in with them because everyone else, all other customers, other clients, other affiliates of these massive conglomerates, these make up hundreds and hundreds, thousands of top companies, Fortune 500 companies are what those big four accounting firms. So when one gets into the space, all of them are getting into the space just to keep up. It's just how it is. So this means that more institutional money is going to be coming in. More is going to be flowing in. BlackRock, you see here, planning to offer crypto trading. Clients are going to be able to sell or trade crypto through the firm's Aladdin investment. Now, this is interesting. They got over 10 trillion with a T assets under management for institutions. So this is going to start, look right here, preparing to offer cryptocurrency trading. So this is more institutional money like we knew it was coming. We know that this market cap is going to be $10 trillion in crypto within probably just a few short years, if not sooner. So we know it's coming. We know that it's coming. Just wanted to point that out here. Now, a lot of talk about CBDCs. The IMF chief here, Kristalina Georgieva, said CBDCs could be safer and cheaper than cryptocurrencies. Of course, they want it because it's easier to control. Certain folks want just direct central bank digital currency to be able to be issued directly from the central bank. Now, there's not a single solution. Reports emerge daily of new central banks that are hopping on the CBDC trend, trying to capitalize on the digitalization of money. Again, a recent research conducted by the International Monetary Fund estimated that approximately 100 such organizations are currently working on launching their own version of digital fiat. Now, China, Sweden, the Bahamas, all of them are looking into this. And I actually have this report pulled up, and I wanted to very briefly summarize it because, again, it's 35 pages. But there's some few very interesting things here as we track and monitor central bank digital currencies. Again, they're just talking about some emerging trends. So let's go over what they're actually looking at. Basically, I read this whole thing, but basically there are 6 current projects here in the world. the Sand Dollar in the Bahamas, the Bank of Canada, the Digital Yuan. This is a Caribbean bank, the ECCB here. There's a Bank of Sweden there. And then you have the Uruguay bank, the Banco de Central de Uruguay. And so these are just different banks that they're examining. They're wanting to look at the main choices. What are they looking at? How will implementing a CBDC roll out? Why are they looking at it? Mainly financial inclusion, access to payments. They're looking at how they can make payments more efficient, and also resilience of payments. The main takeaway here is that a lot of areas in the world are financially underserved, and they're not able to get banks because of complicated AML or KYC. Obviously, if you're watching this video, KYC and AML is, it can be a hassle to get some of those documents. And so a lot of folks are just not able to get access to the banking system. So they want to be able to get more people banked with less documentation. So some of the proposals and ideas they're looking at are maybe tiered systems where different CBDCs for, say, lower threshold transaction. Let's just say you'll be able to, spend $500 to $1,000 a month with very limited, if any, documentation. But to do more than that, you're going to need to have more documentation. So that will allow some basic banking services. But also a main thing here is also finding a system that's ensuring resilience of payments during something like a disaster-prone area, or if, here in China, for instance, mobile payment market is dominated by two firms, Alipay and Tenpay, WeChat Pay. So the People's Bank of China has expressed concern that the failure of such firms could have serious consequences to the Chinese payment system. And that's just China. The same idea and risk would apply really to any country. So they want to be able to track things more. But here in the United States, there's going to be more anonymity as well. That will be a type of issue to look at, and how can we keep things anonymous? Now, I got this chart here, the type 3 conceptual CBDC operating models. I wanted to touch on this here before we wrap up the video, because this is important. This is 3 types you see here: unilateral CBDC. This is where the central bank would directly issue the money. And again, here in the United States, we even have legislation being presented right now. Tom Emmer, he's like, listen, we need to prevent the central bank from being able to issue direct currency. So what will probably happen is an intermediated CBDC. At least here in the United States, you see central bank issues the money, but it delegates the function to non-central banks. So these would be like any kind of commercial bank. They would hold commercial paper, and then they're going to have services where they're going to make money on that. Or a synthetic CBDC. Non-central bank actors issue monies backed by central bank assets. So basically like types of stable coins, or a mix of that, Who really knows for sure how it will ultimately play out here in the U.S. But again, the current commercial banking system, that's how they make money right now. So the main issue and a main concern will be, well, what is the business model? Who's making money here? What's the incentive to even build out this infrastructure? And how can we, if the central bank is issuing currency directly, how does commercial banks, how do they exist? What job do they even function or perform there? So they've got to keep that in mind, and they want to build it in a way that, again, the new CBDC system is resilient to grid down scenarios. They even mentioned blackout in this paper too. So it's like, how can we make a system that is resilient? And the takeaway here is it's probably not going to be just one digital ledger technology based system, right? They need to have something that's offline, the ability to pay when not connected to main telecommunication systems. Now I know the Ripple ledger has some ability to be able to be used offline, so that is interesting. Now, no specific tech was issued directly in this. They also want to be able to have cross-border payments using CBDC. Now, they want to be able to tie all this in, and so these are the main, factors that they're thinking about, and these will be the main factors really that any government is going to be looking at. Even here in the United States, the Federal Reserve and what they're looking at with Project Hamilton, distributed ledger technology versus centralized, right? How it's going to come out to play, though, is that no one particular system or even technology is a clear winner. And a lot of central banks are still exploring different technologies, and it will likely just be a mix of different tech. And even like not necessarily just relying on blockchain or DLT technology. Is what they're mentioning in this, is that it does not have to just be DLT technology, right? It could be a mix of those. So those are kind of the takeaways that I got from this paper. They talked about how they can even implement this legal foundation. Some jurisdictions, like here in the United States, there's concern that they again don't want to even have the central bank issue the direct currency. So that's what is mainly affecting that CBDC adoption. Again, we're likely several years away from this being even rolled out here in the United States. And lastly, here you see the Federal Reserve and the MIT developing the new digital dollar. You may have seen this elsewhere in case you missed it. Project Hamilton. They're saying the Fed can process 1.7 transactions per second. Now, this was a theoretical. This wasn't like actual technology right here. You see here the first idea is to decouple transaction validation from execution, which enables us to use a data structure that stores very little data in the core transaction processor. That also makes it easier to scale parts of the system independently. The second idea is a transaction format of the protocol is secure and provides flexibility for potential functionality like self-custodying and future programmability. And the third idea is that they need a system designed to commit protocol that efficiently executes all the transactions. So they're looking at how to really implement, again, some of those main concerns that we talked about in the paper from the IMF. But here, at least specifically in the U.S., they're still discovering it. And this is MIT. This is the Boston Fed, which interestingly, a note, just recently, U.S. Federal Reserve Bank at the helm of CBD research appoints a new president. So Susan M. Collins is set to become the first black woman to head a Federal Reserve Bank. And you see right here, she is actually, so what's interesting to note is that the Federal Reserve Bank of Boston, the Boston Fed, they are tied directly to MIT, who is leading up the research here for the central bank here in the United States and for just overall central bank digital currency, leading that initiative. So it's interesting. I mean, I don't know more really than that, or if there's anything more to be connected there than that. It's just, well, the one branch that's really spearheading the charge, and they're also getting a new bank president. So you see here, the Boston Fed is one of 12 regional banks, but they just happen to be the one leading up this partnership, getting a new president. So pay attention to that. But that, again, is some of the main things to be watching out for, some of the main takeaways and recaps from this week as far as regulation that I've seen. I wanted to summarize and put all that together. So thanks for coming by, as usual, watching this video. I got some more videos coming out. This week has been crazy with a lot of business stuff going on, so I got some more videos coming out for you this weekend. Of course, we're staying up to date on regulation and what's happening in the space. Appreciate every single one of you guys coming by. Please hit the like button if you're through the video this far. Of course, it helps me continue to keep pushing these out. And I appreciate hearing from all of you guys in the comments. We'll see you on the next video.